Hey everyone, my name's Andy. My channel's Finding Value. If you haven't subscribed yet, please subscribe. Click the thumbs up button if you enjoy this content. One of the thesis of this channel is that real estate moving on up will trigger more new homes to be built, which is inflationary. It's been inflationary in the past, and that we're in an expansion phase of real estate. So I'm looking at real estate and some of the metrics about real estate. So what I have pulled up is the last 12 months of data on existing home sales, median price, percent change year over year. And you can see it's intensifying. This is COVID in this area here and then after it. So we were going up at about an 8% clip or so, 7-8%. It dipped a little bit and then it shot up to about 14 or 15%. And we're still holding that 14.5% clip last month. So it's looking really good in terms of house prices, percent change year over year. This is the total existing home sales. You can see the home sales really jumped up 21, 26, and 25%. It is higher than before the crisis. If we go down in market conditions, all these are roughly the same, but the two I want to talk about is distressed sales. There are no distressed sales, which means foreclosures and that are foreclosures are way, way low. There's just nothing being sold there. And that days on the market, it was at 38 days and now we're down to 21. Our inventory is getting eaten up and more buyers are going after less and less homes. So that's one thing I wanted to talk about, which means prices are probably going to remain elevated or even go up faster. So let's go down. Housing supply at the national level. This is inventory. Here's 2, and we're probably right around 2. I mean, this thing is going in a pretty good downtrend. We were at 4 in May of 2020, and we're now all the way down to 2. So inventory is getting eaten up. Days on the market are dropping, which means prices are going to go higher. So we'll continue to go down. Percent change in sales from a year ago by price range. Obviously, there's probably less and less of these because they just don't exist anymore, and more of these because prices are going up. So that's what I wanted to touch on. Real estate's looking very strong to continue to go on up. So that's important because it's one of a portion of our thesis in this channel is that inflation's pushing our investments from the back, and it's coming from real estate, and the real estate market is looking very strong. Also, this is another thing to look at when real estate it's going to have to get far weaker. This is where a market crash could potentially happen, is from residential real estate. Since residential real estate is very strong, I don't know if you're going to get that full market blowout crash. Could technology sector crash or something like that? Sure. But this is going to prop up. It's going to push all of the oil, natural gas, mining, all of those companies in the S&P 500 and Dow. These will all have a big tailwind behind it. So it should look pretty good. This is Finding Value. Hopefully you guys enjoyed this clip. Thank you for watching.